Hello everyone. Now let's wrap up my thread about investing steps for ultra-conservative investors. Previously we had, I think, 5 videos where I explained to you a bit each asset class and possibilities of what you could do with that asset class if you are wealthy, conservative, and you have extreme risk aversion. Like, first was, obviously you have to structure your assets correctly. Then you have to look what is the best option with your cash and cash equivalents. Third, I believe, was insurance, because there are products of insurance which could greatly improve your financial possibilities if something bad happens. Then I talked about pensions and whether or not you should do it. And fifth was fixed income products. So if you are a conservative person with money, you structure your assets right, you put something in cash, you make sure you have good health insurance, good social insurance, life insurance for bad things, and you're protected. Then you go for some pension fund which you have to do anyways if you live in Western country. There will be some requirements from social security laws and whatnot. So you have some pension income and maybe annuities, which some sort of collide, but anyways, you will have that once you are old. And then you could invest part of your assets into high quality fixed income products, which probably will be only asset class which would bring you more money than inflation, or at least same money as inflation. So with these 5 steps you could actually do much better than nothing, because first and foremost you will be protected to minimum for some bad legal consequences. You'll be protected by some tail risks when something bad happens to you and your family. You will have no debt, that includes asset structuring as well. You will have liquid assets for rainy day, which is cash, and then you could invest via dollar cost average in fixed income products, and you will grow some capital anyways. So you will do fine, better than most who don't understand those things. And of course you will make that much if you comparably would invest in stocks or riskier products, but that's the whole idea of this series, that you wouldn't invest in these things. Now, outside of these industries we left real estate, we left real life businesses and stocks, which I already mentioned a couple of times now, because on paper they might sound risky, but here's the thing, that's why I left them for this last video, to tell you a couple of things. They are riskier, like real businesses, stocks and real estate, because people perceive them as riskier. Like real estate, they might not have liquidity. If you buy wrong real estate, you wouldn't be able to sell it unless you are dropping price for 80%. That is provided if real estate goes sour, market as a whole, or that place is very bad and bought for high price, or there may be some nuances that you didn't know before, like there are zoning rights which prohibits you to develop it in the way you did, or there is some unforeseen cost increases and whatnot that might destroy seemingly good real estate project. Or if you invest in business, like business outside of your competence, which would lose your money, and your 100% of your respective investment to that business will go to zero. Yes, and stocks, and many people afraid invest in stocks, because why? Because they're afraid that they might wake up some morning and value of these stocks might plummet for 50 or more percent. Actually, these are all valid cases, because that happens with a lot of regularity. There are an awful lot of bad business deals that have been made. There are awful bad real estate deals. Like, I don't know the proportion between bad real estate deals and bad business deals. Probably it's the same. Like, most of the people who invest badly in these businesses simply haven't done their homework, are unfortunate with wrong timing, so many of these deals go off their plans, and most individual stock investors actually lose money. Namely, those who try to pick stocks and try to find the right investment strategies are losing their money because their stocks underperform or even are negative when market is positive. So yes, what I'm saying here, that initial conclusions for conservative wealthy persons that everything else is bad, they actually have, if you look at real probability and real statistics, they have more sense that you might seem on the surface, and that's the reality of life, Most stocks go nowhere, most businesses fail, and many real estate projects are useless. But if you are professional, these probabilities changes completely. Then you have investing and analyze the process which would weed out probabilities of something bad. And then your abilities to make money are completely different because you are stacking odds in your favor. But that's a different video. I don't want to overlap with the videos on how to invest and other asset classes. I'm just saying here that if you really are a conservative investor, you have some point. And you shouldn't neglect this point and be aware of the facts. But still, even this all is true, you should consider the fact that those low return investments would make a huge difference between cautious stock investing in index funds. That's the one asset class I would say conservative people should look, is the index funds and dollar cost averaging into index funds, because fundamentally it works if you look at very long time frames, because that's the way stock market is structured. That is, if you don't believe in stock market and think this is all scam, it's not like that. And apart from that, yes, you have those 5 steps. You have reasonable skepticism against everything else. Now, I'm even not talking about cryptos or trading here, because this is perceived by very conservative people as outright gamble. And in some extent it's also true, because if you look at statistics, what's the performance of most traders? That's dismal at best. And here you have to be professional to make some money. And for conservative people, this is simply not the case, because those risks and the effort that's required to be successful there is simply not compared to those perceptions of risk and conservative investments that they have. So this is even not into consideration. But yes, these are 5 steps which would make your life way easier. And if you follow these simple 5 steps, it would be better if you are just stashing your money under the mattress, proverbially and literally, and praying that something bad might happen with it, and constantly worry about it. And if you are investing in other businesses, you probably should invest only in businesses which you understand. That would reduce probability of ruin and increases your peacefulness or decreases your stress levels. Define it how you would like. And what else could I say? People have different risk tolerances, different perceptions of what's risky and what's profitable, and different price targets. And if the low return investments with some stableness would help it, then it might help it. But of course, remember, the inflation and defaults in financial sector or in bond market will also impact conservative investors in some point. So no one is immune to everything. There will be always risks. Yes, there might be fewer risks, and there might be much less unforeseen, but there will still be risks. So no one is 100% safe, but you could do better than most. So thanks for these lessons, and see my next videos. Bye.